Hey everyone, thanks for joining me for this one. In this video, it's going to be a fun one. We're going to be looking at Meta's total losses for Reality Labs over the lifetime of the project, let's call it. And we'll look at, with all the money that they've lost over the last 3 years alone on Reality Labs, what could they have done with that money instead? What public companies could they have theoretically acquired and built their business around and integrated into their platforms for the amount of money that they've burned on Reality Labs that hasn't really provided investors with any value thus far. So this one's going to be fun. If you like this type of video or content, please give this video a big thumbs up. It helps a lot with the YouTube algorithm, as well as subscribe to the channel if you haven't yet. Okay, so before getting into how much they've lost and companies they could have bought, it was really interesting to see the last quarter after Mark Zuckerberg announced that this is going to be the year of efficiency for Meta and they're cutting headcount like crazy, that lots of those efficiencies are actually coming from the advertisement and the profitable side of the business. And they still lost $4 billion in the quarter on the metaverse in terms of the investments they're making there in capex to build that business. So he has not slowed down at all on the metaverse, which I found just very interesting from the sound bites that were out in the media, and it seemed like they were taking it really seriously. The stock's gone up a lot behind the efficiencies that they've been driving in the ad side of the business, but to see that they had this much loss from Reality Labs just shows how much more efficiencies they could have technically delivered if they wanted to. And since they chose not to, it really speaks to how Zuckerberg's tripled down on the metaverse. He clearly sees a big opportunity here at some point. But unfortunately, just looking at the data, it hasn't come to fruition yet. Doesn't look like it's close to coming to fruition. So going back to Q4 of 2020, that's when they started losing billions of dollars a quarter on Reality Labs. So you see here, $2 billion, started going up 2.5 billion, up to over 3 billion in Q4 of 21. And then it's really been accelerating throughout 2022 as interest rates were going up and investors were looking for cash and profits now. That didn't apply to their strategy on Reality Labs. They've actually doubled their quarter over quarter losses to 3 billion, then high threes. Now we're into the $4 billion a quarter range. So we'll see how much of the company they can swallow up in Reality Labs losses. But collectively, if I just add all of this up, we're at around $30 billion just in the last 3 years. You got 11 billion, 15, 17, 20, 25, so close to $30 billion. So I know they have some stuff to show for this. They have their Quest items that they're currently taking price reductions on as they try to build out that business a bit. But I really want to go through, instead of what they have right now, which is money losing business, what could they have had instead? So I understand some of this is theoretical, but I think it'll be a fun exercise to just kind of showcase exactly how much money has been sunk into Reality Labs over the last 3 years. So the first company that they could have bought and more is eBay. You know, Facebook and Meta have been trying to incorporate e-commerce. They have Facebook Marketplace, stuff like that. If they just wanted to make a huge bet on that side of their business, they could have literally acquired eBay for the amount of money that they've wasted or spent in the last 3 years on the metaverse. It's a profitable company. It's trading at 37 times earnings, which means it probably makes around $600-700 million a year. But instead of allocating capital to that, they're allocating capital to something that doesn't have unit economics that makes sense. Some other companies that they never buy, but they theoretically could. The Kellogg Company, so huge food CPG company, trading at $24 billion, also making about $1 billion a year, give or take. Could have bought that business, not that they ever would. Another one of the biggest beauty retailers in the world, Ulta Beauty, $26 billion company, still worth less than apparently the current investment that Meta shareholders have made on Reality Labs. So I think those just go to show how big $30 billion is. in terms of some of these companies they could have bought. Now, I know those ones were kind of not realistic because of the space they play, but in a world where acquisitions weren't blocked, I think it would be fun to look at some more practical examples of what could have really built their business. For $30 billion, they could have bought Snapchat for 13 and Pinterest for 14 and still had some left on the bone. So the value over the last 3 years that's been invested in Reality Labs, they could have literally bought out two of their smaller competitors in a world where regulatory barriers weren't an obstacle. But that just goes again to show how much they could have built their ad business, if not in acquisitions through like Pinterest and Snap, in other ways by investing in their own capabilities, their own platforms from the ground up. So huge investments, potentially opportunity costs for allocating this money to Reality Labs versus to their advertising business or building their advertising presence across the market. And let's just say they didn't want to double down on advertising farther. They truly wanted to diversify. For the amount of money that has been spent on Reality Labs, Meta could have bought DocuSign for $9 billion, Box for $4 billion, and Dropbox for $7 billion, and still had $7 or $8 billion left in their bank account. So they could have literally aggregated up a software company, started working directly with businesses, which they partner with on WhatsApp and stuff like that. Started having some of their own cloud services to store data, store clients' data, and make new revenue streams from that side. That most of these companies are actually profitable. You see Drop here with a price to earnings ratio. I think DocuSign and Box are a bit more early stage. Well, Box looks like it's essentially break even, but you know what I'm getting at. So this money for the second example, first example is they could have invested in new or their own social media capabilities. They truly wanted diversification. They could have went out and bought companies for the amount that they spent on Reality Labs. And then lastly, while not companies that they could have bought fully, just to put it in the scope, they could have bought literally 50% of Shopify. So they could own 50% of one of the largest e-commerce companies in the world, which would have worked fantastic for their business, given how much integrated commerce there is on Instagram today, and they're working on that on Facebook. Imagine being able to click through and have like a Shopify page geared into the Instagram platform for creators and influencers to sell merchandise, stuff like that. They literally could have made that happen just with the money that they've allocated over the last 3 years to Reality Labs. And then they're also looking at like payments and stuff like that. So Square, which is one of the largest payment companies in the world, obviously owns, or Block obviously owns the Cash App, which is a huge app in finance. They pretty much almost could have bought out that company as well, trading about $5 billion more. You know, give Meta a couple of quarters, and I'm sure they'll surpass that $36 billion market value of Block with just what they've dumped into Reality Labs. So as I look at this, you can kind of get my perspective that I think there's much better strategic avenues and opportunities for this capital than Reality Labs. I hope I'm proved wrong. I am a Meta shareholder, somewhat unfortunately over the last couple years. But this just seems insane to me, and I have no perspective or line of sight to when this is going to either decelerate or, God forbid, turn to profit one day. So I hope that it's not too much longer, and this is really the heavy spending period. But just looking at all the opportunity costs that this $30 billion plus, as we continue on this path, could have went into, I'm having a hard time understanding how this is the best allocation to this capital, especially in a time that current day interest rates are 6%. We could have been making billions of dollars a year just on interest on this capital. So the end payout would have to be huge to justify losing the working dollars over such a long period of time. So that's my thoughts on the situation. Kind of a tongue-in-cheek video on hypothetically what companies they could have bought, and my thoughts on how much money is being spent here. Would love to hear your thoughts in the comments. Once again, if you made it to the end of the video, really appreciate it. I don't get too many people watching the videos all the way through, so let me know in the comments if you made it all the way through. And in addition to that, would love if you just hit the thumbs up button. It really helps with the YouTube algorithm, and consider subscribing to the channel. I'll see you guys in the next one.